let's talk about how land finance and construction finance works, because typically when you talk about development finance, it's basically divided into these two parts. And what has your experience been in relation to how, these stage gate or milestones work and, how the finance comes through?
Sure. Let's start on the land side of things, which can be very interesting depending on what type of asset is being acquired. So I've seen anything from vacant land without a DA to vacant land with a DA, all the way to commercial property that the clients are planning to intend to convert into residential. So finding a home for that initial loan is really important, because I guess the main thing is the clients, if they're acquiring the site, they want to keep their costs as low as possible. They potentially have a 12 to 18 month fight with council to be able to get approval for what they're looking to do. So acquiring it at the cheapest rate as possible is really important. I might shoot myself a little bit in the foot by saying this, but obviously resi finance is the ideal goal that clients are looking to acquire for that initial stage. So, banks, etc. Challenge is banks really don't want to play in this space. I mean, if the client's buying a property to develop it, the banks are exposed from a risk perspective at various stages. If the client's demolished the house on it and then the land value is worth less than the value of the loan, they're exposed. So they don't really want anything to do with residential development. Banks exist purely for the idea of getting a client to acquire a property, loans paid out over 30 years, they make their interest and that's it. They're not getting any of the upside benefit of you developing the land. So for them, it's more risk basically. So besides obviously if, a client acquiring a normal house with no permits or anything like that, it is something that can fit in the resi space, and the clients may decide to change their mind during that process that they might want to develop it. That might not be something that brokers are privy to. So it's just something that obviously we look at in first instance if the clients are acquiring. If there's a resi option to proceed, it could be a really good option.
Banks are getting smarter as well, right? So, a lot of people think that, banks don't look at a lot of things. If you have conditions like, subject to DA or subject to this tree being removed, or, your entity has, XYZ development PTY Ltd, of course, the bank would know that, okay, this guy or this person or this trust or this company is going to do a development in the future, right? So it's always important that, before you sign the contract, you are, taking care of some of these little nitty-gritties. Yes, it makes sense to start off in the resi world. You're talking about the raw site, you're talking about sites with no planning applications in place, and you are going to the bank making it look like that this is, a typical, investment property purchase, and that's basically where you're going to start off the conversation.
Of course. And look, banks, as you said, are getting smarter. It's coming to a point where any block size over 600 meters squared, banks are coming back and saying this could be a future development site. So it influences us in the resi side, where a client might not even be buying a development property, but banks are concerned about larger blocks these days and these things happening. And especially when clients do things like subdivisions. I've actually had a client that was refused a subdivision a few weeks ago, mainly because of the fact that the bank just doesn't want to have any appetite in that place. And I've never heard of a subdivision being refused. I mean, generally when you're breaking a land into two portions, you're going to have a higher realized value. Yeah. So it seems like a no-brainer. But again, that's just completely removing themselves from the market.